Markets right now are looking to open lower. We've seen crypto starting to come down just a little bit, maybe retesting key support. This is a chart that I talked about recently, and the reason why I want to bring this to your attention is simply that I talked about this like 2 weeks ago and warned you guys that the semis were going to come down. I said, NVIDIA, the competition's coming for it. The economy's going to slow. That's not good for chips. Don't care if they're AI chips. It's still going to slow overall. And what we did here, very simply, right? I basically said, okay, look at the semis. This is the SMH. Okay, that's the SMH. And this was Bitcoin up until that same point. Look at they're identical. Now, patterns, it doesn't matter the asset class. Human nature doesn't change. That's why patterns continue to form. And essentially, what you want to do here is you want to say, okay, well, if that's the case, what happens now with Bitcoin? What did we see with Bitcoin? And we obviously saw the rollover back down, right? So again, we can clearly move back, and there we have that bigger time frame. And the estimation for me personally is that essentially what we're going to see on this is this, okay? Now, again, it's still going to have bounces along the way, and you're hearing all the narratives like, oh, that can't happen, AI. Folks, we go into a recession, people are going to come back. Spending from companies is going to come back. It's happening already. Go look at your housing market, all right? Mainly, think about this. Even people that are still buying houses, they're getting 8%, 7.5% interest rate loans, mortgages. Think about how much money that's taking out of the economy. So now their payment went from like $2,300 a month on X loan to $3,800 a month. I mean, you're talking $1,500 that they can't spend as disposable income because they're using it for their house. It's locking money up. It is not good for the economy. And again, the pattern should repeat, right? Patterns are patterns. That's, again, should be the future of the SMH.
Europe's Bitcoin ETF sets an example of regulatory progress in the cryptocurrency space. However, integrating digital assets into traditional financial systems continues to be an issue. Europe's Bitcoin ETF takes the lead, offering institutional investors a clear, secure, and sustainable way to access Bitcoin. A Bitcoin ETF simplifies cryptocurrency investment, allowing exposure without ownership. It's akin to traditional ETFs, functioning like stocks, but with Bitcoin as the underlying asset. Investors seek profit from cryptocurrency's price fluctuations, not just decentralization. Challenges persist in integrating digital assets into traditional financial systems despite Europe's ETF success. Investors in a Bitcoin ETF don't directly own Bitcoin. They hold shares representing Bitcoin holdings, making it more accessible. However, regulatory hurdles exist, notably the SEC's repeated rejections citing investor protection concerns. While Bitcoin ETFs provide convenience, they lack the control associated with owning Bitcoin directly. The potential approval of a Bitcoin ETF by the SEC could transform Bitcoin into a mainstream asset. Yet Bitcoin is unique. True ownership means controlling cryptographic keys, not ETF shares. Profit-seeking has eclipsed cryptocurrency's original ideals, driving its evolution. Governments aim to safeguard investors through regulation, fostering mainstream adoption. India's crypto market faces uncertainty due to inconsistent government policies. The crypto market anticipates a significant downturn due to the Federal Reserve's hawkish stance and liquidity tightening. Bitcoin could plummet by 43%, causing a $440 billion reduction in total market capitalization. The Fed's hawkish policies have triggered a crypto retreat, impacting Bitcoin, Ether, and other top digital assets. U.S. stock futures remain resilient despite crypto's downturn, reflecting the disconnect between digital currencies and traditional markets. The interconnectedness of global financial markets highlights the impact of central bank policies on digital assets. Ripple celebrates its legal victory in New York City, potentially shaping trader sentiment. SEC Chair Gensler faces scrutiny from the House Financial Services Committee regarding crypto regulation. Chainlink's SmartCon event features speakers from leading firms with anticipation of significant announcements. The Arbitrum Network's Arbitrum Odyssey rewards participants and boosts engagement. Thus, macro events, including economic data releases and Fed speakers, impact both crypto and traditional markets. Friday's PCE data release and other metrics could influence market dynamics. Let's continue our discussion with Gareth Soloway.
Bitcoin again, we have this classic chart. I've given you every major resistance and support level on Bitcoin. And again, just last week, we talked about how Bitcoin was getting this rally, but it was going to have resistance based on this area here. What happened? We pulled back. So now the big question comes in on Bitcoin is that where does this ultimately go? All right, and again, I'm going to just zoom in just a little bit on this chart so we can kind of see exactly what the probabilities are. Okay, so now we've pulled back off this. See all of these candles right here? They're all in alignment. You got this little pop. We came right back in here. That is your area to watch. So we're basically looking at 26,000. 26,000, you want to generally see it hold that area. We can make a case that it's a little bit below that, maybe 25.8, but that will be support, and we are coming into that support. Now, if we break that, you have this low here, which is going to be very important. That's going to be the game changer. This one's important here, right? But it's more just technical support. That's all it is. This one down here is unbelievably important because it mirrors the pivot low, and it was just slightly higher from this point over here, right? So we know about the low, and this is still a higher low. So if we come down and we take this out and we make a lower low and lower low to that, that would be detrimental. And I would honestly expect a move to 20,000. So if you break this low, which is around 24,800, all right, if you break 24,800, start looking for 20,000 support on Bitcoin. As long as you hold this, technically speaking, you could easily move back up into this level, which will be resistance, and break out and go as high as 30. Now, what's interesting is if we got the ETF news, which is due in about 20 to 21 days from the SEC, potentially allowing Bitcoin to have a spot ETF, BlackRock, Fidelity, all these other players, if that were to happen, guys, then you would absolutely see us potentially popping to the upside, right? We potentially could go back to 30,000. Now, would we go through 30,000, 32,000? That's the big question. One thing I do want to point out, and again, this is something new on Bitcoin. Let's just say we do have a move up here. All right, in fact, I'm going to quickly zoom, or actually we're going to drag this chart over. All right, so here we have this chart. Now, let's just say that we get a move up on spot ETF news. And let's just say it goes into this area, this upsloping line, this flat line here. All right, and then it starts to curl over. Can anyone tell me what that pattern formation could be? Take a look. Possible head and shoulders pattern. Now, again, this is speculation because I don't know if the ETF will get approved. But if the ETF gets approved, you will get a pop. There's no doubt about it. When you're looking at a head and shoulders and you see the pop, this shoulder must remain lower than that high, which is around 32, just under 32,000, for it to be valid as a head and shoulders. If you take out that line, then it is no longer a head and shoulders. And like I've said, if you can establish yourself above 31, 32,000 and stay there for probably 7 trading days, you likely are heading higher. But if you don't, and you move up here, you now have a head and shoulder pattern, and you can actually do a measured move on this, and I'm just guesstimating here that basically you'd be looking at a move down to 20,000, okay? 20,000 would give us that target at the downside of a head and shoulders pattern. All right, just some interesting little tidbits there to keep an eye on. And by the way, by no means am I saying that pattern's going to form, but as a technician, I need to be ready for anything that occurs in the market. So right off the bat, this is the US dollar chart. Now, the reason why this is important is the market likes to move inverse to the dollar. If the dollar goes up, the markets go down, and that's the name of the game. So what's happening here, this is the daily chart of the dollar. Not only do we see a sharp move up in the US dollar over the last really 3 or 4 months, but look at this. We're green again today. I know it's hard to see. And look at this. We're now into this resistance level right here, okay? Now, the key to this is understanding what this means. Now, what it means to me is that the dollar is short-term extended, and it's also into resistance. So resistance 1, 2, and 3. Now, again, you'll hear people talking about, wow, the dollar is going to keep going up and up. I don't buy it, and I'm still not buying it. We're still into resistance, and a good technician, a good technical trader doesn't buy it unless it breaks out. Now, again, remember, everything I do is probability-based. So right now, hitting this trend line, you're into resistance. If we break through it, a new ball game starts. But right now, we're still into this level, and therefore, to me, the markets, again, are into a point on the dollar where we're at resistance and we may pull back. All right, so again, just to understand that aspect, again, I can zoom in on the chart real quick for you guys to be able to see a little bit closer here. If we zoom in there, that's today. This is the current candle. It is green, which means, what does it mean for the markets, right? It means markets are down this morning, which again is continuing the sell-off from yesterday. But also, we are into the high pivot for the last 3 days. In other words, the dollar has been stalling here, but trying to break out. It's trying. You got to give it credit. It is trying to break higher, but as of now, it's unable to. So this is number one of what I'm watching in the markets, okay? You got to keep an eye on the U.S. dollar. If it breaks out, that's possibly a very big negative for the overall markets.
That wraps up today's crypto news highlights. Stay tuned for more updates, insights, and analysis from the world of cryptocurrencies. Please share your thoughts in the comments below. Don't forget to like this video and subscribe to our channel for more engaging content.